Thank you very much for coming. My name is Darren Joseph, HEJ.tax. Our team is really about tax. We work with private clients and we help them demystify the sometimes confusing world of international taxation. We're part of a wider practice here in Asia called Moore's Roland. I'm actually here for Weber Partners meeting. We have it twice a year, and this time it's Jakarta's turn to host us. So I thought while I'm in town, I will set up some time and meet some of you guys. So thanks for coming out. It's an inflection point because after 5 years, you can apply for citizenship anyway. So if you're holding off, it's probably for a reason, and it's worth talking about it. If it is, so there are lots of others, but the two primary vehicles, someone from Indonesia for doing business in the US will be setting up a company, and the company can either be a C Corp or an LLC. If it is that you set up a C Corp, you basically commit to paying that 21% corporate tax. So even though you don't have what we call nexus or permanent establishment, is the term in the US, you're going to be paying 21%. If it is that you have an LLC, which we establish as a pass-through, transparent for tax purposes. So the equivalent of in Indonesia will be a partnership. So if an LLC is a partnership, unless you elect for it to be treated as a C Corp, to keep it simple. If it is you have no nexus or permanent establishment in the US, it normally is not subject to tax in the US. So the tax residency is triggered if there's nexus or permanent establishment. What does that mean? It means if you have, it's actually similar to the rules around permanent establishment in Indonesia. So you need to have a simple way of looking at it is if you have boots on the ground. So if you have an employee, if you have a store, physical location, you have inventory, your physical products stored in a warehouse somewhere, you have a showroom, you have something in the US. So, I mean, an easy way is to look at the rules here and transpose that to the US. So whatever, if you have something physical, boots on the ground in the US, chances are you have a permanent establishment, you have nexus, and it triggers income tax there. So that's a simple way to look at it. If it is that this person, they get like an H-1B1 or some sort of business visa and they're spending time in the US and they're conducting business, they're shaking hands, signing contracts in the US, that creates a nexus, that creates a permanent establishment as well. So the US system, more or less, is based on trust. So they assume that you're going to be more or less doing the right thing. So it's up to you to self-declare. However, if they figure out after the fact that you weren't self-declaring, then they come down pretty hard. They come down really aggressive. And remember, I mentioned that the CI unit, the criminal investigation unit, within the IRS, they have like a 96, 97% conviction rate. So once they figure you out, they tend to get you. So that's the idea of nexus. To your question about just having an address, if you have like a WeWork and you just have a virtual address, normally no, but it could be yes in states like California. Because California, on a spectrum, is perhaps the most aggressive state in the union. So in the US, you have multiple layers of tax. So you have federal tax, which is levied by the IRS. And then at state, you have 50 states in the union, more or less, and each has taxing rights. Some states say, I'm not going to tax you, like Texas or Florida, Wyoming, Nevada, Alaska. And some states say, I'm going to tax you hard, like California and New York. And California is the most aggressive state in the union when it comes to tax. And of course, for you guys that work with tech companies, that's where you want to go. So you set up a company and you get a California WeWork or whatever address, you may be opening up yourself to taxes in California, state of California. So that's something to bear in mind. So just by having an address, it could trigger. And I mean like a virtual or an actual office address. You need to have like an agent, a resident agent with your LLC when you form a company. This is somebody to receive official mail on your behalf. I'm not talking about that. I'm talking when you go and you sign a contract for an office space or virtual office space that may trigger tax residence. You need to have a conversation around that. The last point you made about banking, a lot of those banks aren't banks. So when you, for example, Mercury, when you read the fine print, Mercury is not a bank, it's a platform. It's a technology platform. So the rules around those banks, whether they be virtual or platforms or real, so it's becoming increasingly difficult like it was like a few years ago. You go online, you form an LLC, and then 2 clicks later you have a bank account, right? And that's becoming more and more difficult. What they're looking for is increasingly real presence in the US. You need to justify why do you need a US bank account. And in order to meet then the increasingly high standards what they're inviting you to do is to enter the US tax net because they want you to have an office. And by virtue of having an office, you may create permanent establishment. And therefore you have to pay taxes. So, I mean, they're all different. I just know about Mercury because many of my clients use it. I use Mercury as well. But, the rules are similar with all the banks because they're following the same playbook. Yeah, you can still use it, but one by one, people are getting emails from me asking you to declare more. We need more information. That's basically the title of the email. But what they're actually doing is they're looking for those without a genuine presence in the US, and then they're going to kick you out. So that's generally the intention. And not just them, Stripe has been asking questions as well. And so, yeah, it's a thing when it comes to finance, because remember, we were saying the US doesn't care about revenue collection, they care about information.